Good morning. This is Jovine with Behind the Markets. Happy Tuesday. Today is Tuesday, April 22nd, and today is National Jelly Bean Day. And I'll tell you what, the minute I hear that, first of all, I'm happy that somebody thought of making that a thing. And of course, who else do you think of but President Reagan when you think of jelly beans? You know, the big jar of jelly beans he had on his desk starting when he was governor of California. Boy, he was a great governor. Doesn't get enough credit for that. He was a terrific governor and, of course, one of my favorite presidents. Anyway, today I wanted to talk about the tariffs. In my friend group, there have been a lot of questions among diehard Trump supporters and non-supporters. I have friends on all sides, really, about the tariffs. The question is, why did President Trump so quickly take off all the tariffs that he slapped on all these other countries? And you're seeing news reports leak out about a split in the Trump administration between Scott Bessent, the Treasury Secretary, and Commerce Secretary Lutnick on one side, and then Steve Miller and Peter Navarro on another side. And, I want to tell you what's happening on the view from Wall Street, behind the scenes of what most, professional investors understand this, but non-professional spectators don't really understand to the extent really what's going on. I figured I've been sharing it with them. I'll share it with you here. And I've certainly shared it with members of Takeover Targets. Trump slapped these tariffs on all these countries to try to correct the trade deficit, about $1 trillion a year, a trade in goods. Importantly, it's not a services deficit. We're not calculating services. For example, when Microsoft sells Europe cloud software, that's not included in Trump's deficit, his trade deficit. He's just talking about goods, like things you get from China, basically, or from other countries, wine, cars, pens, you name it, fans, things like that, televisions, mostly dumb products for the most part. So anyway, stuff you see at Walmart and Target, clothes. So anyway, Trump slapped this. We have a trade deficit of about $1 trillion a year. We also have a budget deficit of about $2 trillion a year. Now, when President Trump canceled the universal tariff, he put on everybody. He said a very interesting word. He said the debt markets are getting a little yippy. That was the word he used, yippy. The yips are a sports metaphor. When, let's say, a pitcher gets the yips, that means he can't find the strike zone. He gets too nervous to even throw strikes. It kind of gets in their own head. But, what Trump was probably told behind closed doors by the Treasury Secretary and Lutnick, both Wall Street guys, is what I'm going to tell you. And here it is. The trade deficit is one thing, but we also have a very big budget deficit, okay? We have a budget deficit that's bigger than our trade deficit. Our trade deficit's about $1 trillion a year. Our budget deficit's about $2 trillion a year, meaning we spend $2 trillion a year more than we take in tax revenue. Now, how do we finance that? Who pays for that? How do we pay for that? Who's our credit card company, in other words? Guess what? Our credit card company are all these countries, in large part, that have been buying this debt. Okay, so basically every week, we sell debt. The United States government, Treasury Department, goes into the debt market and says we need to borrow $120 billion this week, $40 billion that week, $80 billion this week. And the buyers of the debt are Europe, Japan, South Korea, France, Canada, Mexico, all the usual suspects. Okay. One thing that concerned me is you have to keep in mind, Mark Carney, Canada's new prime minister, who's running for re-election again after taking over in the Liberal Party from Justin Trudeau. Canada's new prime minister, Mark Carney, was the governor of the Bank of Canada for years. And that's like being the head of the Federal Reserve. Jerome Powell, he was Canada's head of their Federal Reserve. He did such a good job there. After doing that for 3-4 years, the Bank of England asked him to come to Europe and help become the governor of the Bank of England. And he did that from 2013 to 2020 or thereabouts. So basically, you have a guy who's very shrewd in financial matters. And one of the things he did is when Trump slapped the tariffs on Canada is he flew to Europe. It's not impossible to imagine. What do you think he said in those private meetings with the prime ministers of Europe? It's not impossible to imagine. He said something like this. Hey, guys, there's no reason to have a public fight with President Trump of America. All you got to do, just stop buying their bonds every week. So when Goldman Sachs and all these banks call you up saying, hey, the Treasury has $100 billion of bonds to sell this week to finance that $2 trillion deficit, they want to borrow this money, just don't lend it to them. It's not that big of a deal. We don't have to have this public fight where nobody wins. Just don't lend them the money. What happened is, for only the sixth time in American history, both bond prices went down, which sent yields up, and the stock market went down at the same time. The dollar went down and the stock market went down. Think of COVID. Think of the 2009 Great Recession. Think of the dot-com crash. Usually when the stock market rushes, gets hammered down, people sell their stocks and they flood in and buy safe haven assets like U.S. Treasuries. But this time they didn't. They sold their stocks and they pulled their money out of America, which sent treasuries down. They sold treasuries too, and the dollar down for only the sixth time in American history. The dollar went down at the same time the stock market went down. So basically what you have a situation here is the simultaneous move into negative territory of equities, these risk assets, and government bonds, these safe assets, and the dollar, again, another safe asset. That usually doesn't happen. Usually they go in opposite directions. So what does that tell us? That tells us that international investors are pulling their money from the United States, which sends interest rates higher because they're selling bonds, selling stocks. When you sell bonds, remember there's a seesaw relationship between the price of bonds and yield. So people who sell bonds, when they start selling bonds down, yields go up. This is why the 10-year yield has gone higher. This is why the market has been hammered. Again, this is only the sixth time in American history something like this has happened. So yes, we have lived through historic times, without a doubt, not just because of the stock market. That's just on the surface. But what's happening behind the scenes is a heck of a lot more important. And I thought I owed it to you to try to explain it to the best of my ability. Anyway, that's all I have today. Have a wonderful day, and I will see you tomorrow.